Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 14th of March 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. First of all, let's have a quick look at cable. Off the top, down by 0.22%, but still trading with a 132.50 handle, and we'll come on to the reasons for the moving cable a little bit later on in the video. There was also a move lower from both the Australian dollar and the New Zealand dollar, both of which were down by more than 0.3%. Excuse me, against their US rival, also giving ground against the dollar. The Canadian dollar and the Mexican peso down by 0.13% and 0.16% respectively. The rand also slipping down by 0.23% against the US dollar, with dollar index appreciating by 0.17% overnight. Okay, let's take a look at what's on the calendar and events that may move the markets today. A relatively light calendar. We've already had consumer inflation data out of Australia, as well as retail sales and industrial production data out of China for the month of January. At 7 a.m. GMT, the harmonised index of consumer prices from Germany be released for the month of February. And then there's a pause until 12:30 when we cross over the Atlantic for initial and continuing jobless claims, almost a week after the release of the February non-farm payrolls. At 1400, we shall have new home sales data out of the US for the month of January. There was some better data out of the US housing market yesterday as more higher priced homes were changing hands, data revealed then. At 1900 tonight we'll have the latest in a series of UK parliamentary votes on the Brexit process, more on that in a moment. At 21:30 GMT we'll be in New Zealand for business PMI data for the month of February, and at 22:50 we're back in Canada for a speech by the Bank of Canada's Governor Wilkins. Okay then, breaking news and comment that's caught my eye. First of all, UK MPs have voted against the UK leaving the EU on a no-deal basis. However, that vote is not legally binding. Parliament will debate and vote today an extension to the Article 50, but of course that would require the EU's permission. So it's still very much a fluid situation, and the countdown clock is still ticking. China's industrial production data fell to levels not seen since 2002 during January, and Chinese stocks have fallen back on that news. Oil prices have traded higher, up to 4-month highs in fact, as US inventories released yesterday unexpectedly fell. That was a surprise, but it does show at least that there's more demand, at least in the short term, for oil in the US economy than was previously thought. Tesla is set to unveil its new low-cost car, the Model Y, today. It'll be very interesting to see what Mr. Musk has up his sleeve. Maybe that will put some of the controversies surrounding the company to bed, at least for a short while. Okay then, food for thought and something to take away with you into the trading day and beyond. Why not think about this? We've had a decade of low interest rates and cheap money, and some governments, corporates and households have loaded up on debt during this time. That's okay, of course, if interest rates stay low and economic growth stays above them. But what if it doesn't? There's a fascinating table here sourced from Reuters that shows the levels of debt to GDP in a variety of economies and groups, and breaks that down by non-financial corporates, governments, households and total debts. It shows those figures for June 2018 and June 2008. So a real chance to see who's indebted, whose debts have been rising, and who's been paying those debts down over the last decade. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of trading leverage products for you, then please do contact your Pepperstone account representative and they'll be happy to take you through that. And as I say, please do read this risk warning carefully. Thank you for your time today.